Pankaj Pandey, good morning. How are you feeling this morning?
Good morning, Nikunj. Thanks for having me.
What are you telling your clients? Nifty 20,000. अब क्या है इसके बाद?
So, Nikunj, on the Nifty, what we have been saying is that overall our target is 21,500, which is 19 times FY25 earnings. And possibly in some months, we would be incorporating FY26 numbers. So largely, overall earning trajectory for next 2-3 years is going to be 16.5 kind of a percent. So I think that is the kind of a return, broader return, what one can expect in Nifty on a sort of ongoing basis. But I think we have seen the market sort of rallying up, especially the mid-cap, small-cap space. I think the pace of rally is definitely surprising. So I think large caps are offering a lot more comfort from a risk-reward perspective compared to mid-caps and small-caps. But having said that, we still get stocks in the mid-cap and small-cap where we haven't seen the kind of appreciation, and possibly some of these names are still sort of looking good. But I think this is not a time to sort of exit market given the fact that we are sort of trading at rich valuation. I think one thing is very clear given the kind of inflows what we are seeing. It's too much money chasing few good stocks. So I think one should not really downtrade in terms of quality of stocks, and possibly which is why you may not really get stocks at a cheaper level. So I think in this kind of overall broader rally, I think quality of stock is paramount. So I think that is where I think that holds the key, because we could keep getting correction in between or going forward also as well. But if you're holding a good quality stock, at least the ability to sort of buy at lower levels is definitely, or you get confidence to buy at lower levels. But yes, good times, and our sense is that this is going to sort of persist for next 5-7 years. I think India is one of the few markets where growth is sort of confirmed, and rightly so also.
Give me a pocket where you think it's time to book profits, and give me a pocket where you think the best is yet to come. And we have a long way to go. When I say long way to go, not like a 10-15% move. A 50-60% move in 3 to 5 years cannot be ruled out.
So, Nikunj, I think when you sort of look at some of the pockets, for example, railways, I mean, we have this announcement of economic corridor. It's very difficult to sort of pencil in numbers for some of these counters. And with the kind of rally what we have seen, so probably that space looks a bit overheated. And then you could have individual stocks which can, where we are sort of liking is, say, for example, you look at PSU banks. I think PSU banks can still deliver a good mid-teen kind of a growth. We recently recommended, say, Bank of India, where we expect that the ROAs could improve from 0.5 to 0.8. It is trading at 0.6. Mind you, in good times, some of these names have traded closer to 2-time books. So I think that is one space which is PSU Bank as a space is looking good. I think IT is also sort of, at least the tier 1 names are looking okay compared to the overall tier 2 names, because tier 2s have already sort of rallied up. Then I think there's some names on the logistics side. So we have been liking delivery for quite some time. I think if India has to evolve as a manufacturing hub overall, then logistics as a space has to sort of do well. Delivery is something which I've been liking. And then I think real estate as an overall pack can still deliver. It's coming out after 10 years of overall consolidation. So what we like is say something like Mahindra Lifespace, which is talking of 5x growth from current levels, or something like Brigade Enterprises, which has been sort of doing very well, does not carry much of a debt on the residential side. And then you have some names on the auto ancillary side which are sort of EV agnostic. On the large caps, I think something like L&T, Reliance, HDFC Bank, I think, or even consumption names like Titan are looking attractive to us.
Looking attractive there. In short while from now, we'll have Vijay Kedia as well join in and talk about what his take on the markets are. But let's just address some of the buzzers from yesterday. The Adani group of names, sure, after the promoter upping their stake in Adani Enterprises as well as Adani Ports, those set of stocks held out just very smartly. We've seen a significant addition to their market cap in yesterday's trading session alone. There was Glenmark, there was HDFC AMC, there was Canara Bank. All of these names held held out very, very smartly indeed. And then, of course, there was the entire gamut of the banking names, right, Kunal? Everything from SBI to Axis charged ahead. But would you still pick out HDFC Bank, or would you bet big on maybe an SBI, Axis, or IndusInd for that matter?
I think it's going to be a mix of banking names which should do well. The reason for picking up HDFC Bank was possibly because the stock was a huge underperformer. So it just not just a 1%, 2% rise in HDFC Bank, but it's the perk up in terms of sentiment and the weightage it has in the Nifty and the Bank Nifty which matters the most. Now there are far more better stocks in terms of the breakout candidates, like IndusInd Bank has already broken past about the 1400 levels. Axis Bank yesterday managed to cross the 1000 levels, I think, for the first time. So there are many better candidates in terms of a breakout which have already confirmed it way ahead than the large cap private sector names. But I think it's a matter of how the quality of the sector as well as the strength of the entire sector is, and I think that's the whole and soul of this rally for the markets.
Right, okay. We'll thank Pankaj Pandey.